welcome to yet another show of Currency Options Manage Your Foreign Exchange. Now, any product is always targeted at three segments: your hedgers, speculators and arbitragers. Now, in the OTC or over-the-counter interbank market, it is called only someone with an existing foreign exchange exposure can participate, and those would primarily be your hedgers. But with the introduction of exchange-traded futures and now options, every single resident Indian can participate. It even gets your speculators and arbitragers into the currency market. Mukesh, getting you into this conversation, because when RBI introduced exchange traded products, it was with the hope of getting even retail participants into the fray. How is retail taken up to currency options in terms of the risk reward? How does it fare vis-a-vis maybe something like stock options?
See, currency options are definitely more lucrative for the retail segment. The reason being, for comparison, if we see the option prices for the stocks or index and compare with the currency, then the percentage of the cost is, say, for example, 1% on the currency, while it is cost of 4% around on the Nifty index options. So that way it's a low cost option available, number one. Number two, the retail part is not knowing the actual things going on in the currency, but it is very lucrative, as good as Nifty options.
Mukesh, you made a very interesting point about the pricing in terms of the premium being lower. Is it because in the currency space the volatility is lower and hence the premium is lower? And also attached with lower volatility is the fact that it takes a lot more for you to make that much money to offset the kind of premium that you're paying up front.
But if you see the volatility in terms of rupee dollar is less, but if you compare internationally, the currency movements are as volatile as the stock movements. Like euro has moved around 7-8% within last 1 month. So this cost of the options is less, not only because of the volatility is less, but it is more of a attractive product, I would say.
Kamlesh, would you agree? Is it a very attractive product for retail? And because one of the reasons that all the people that we've spoken to have said that liquidity is currently an issue, and with that comes an impact cost or an exit option for retail person. How is the current market situation in India?
Currently we have volume of about 1000 crore on a daily basis. Yes, liquidity problem is there, and it will take some time for volume to build up. The product is new, awareness is required. People need to be educated through educative series like this. Again, options being a very safe instrument, it will be easier for them to handle and take active participation in this market.
Mukesh, coming back to you on this, because I remember earlier you were telling me that current liquidity is also sufficient for a retail opportunity.
It used to be a case about 2 months back, not now. The liquidity has increased like anything. For example, now the Nifty future, Nifty options, and if you compare with the currency options, the turnover, like for example, about 10 to 12,000 crores yesterday for the currency future. And if you see the index future, it was the turnover of around 13,000 crore. So the liquidity is increasing, not only in the future but also in the options.
Use your strategy, the way you look at the market and the way you perceive the market. For retail investor, it is advisable that they trade in option to start with.